My base case for 2025 coming into the year was a no landing scenario. A strong consumer drives discretionary spending and a government that continues to fiscal thrust, basically spending more than they're taking in. That sets up a really nice backdrop for growth. But the protectionism, the tariffs, the nationalism, all of those things are unequivocally inflationary. And Trump's rhetoric, if it stays as rhetoric, is one thing. But if it turns into policy, we would change our base case from no landing to stagflation. And that's toxic for bonds and equities.
If stagflation were to materialize, what levers would Trump himself have to fight stagflation, and what tools would the Fed have?
Yeah, it's very difficult. You really undercut the Fed because the Fed's got its dual mandate about growth and inflation. But you're killing growth and you're pushing up inflation. So the Fed's going to be in an untenable situation. It's not going to be able to win. So monetary policy doesn't really work in a stagflationary environment. You've got to choose which battle you want to fight. And the way to end stagflation is pulling back the policies that have created it. So populism leads to inflation because it's making promises that you really can't fund. It's pushing immigrants out of the country, pushing up labor costs. You've got to go back towards globalization, towards free trade, outsourcing where things can be manufactured cheaply. So it would be a complete 180 would be the way to end the stagflation if it does occur.
Patrick, why have markets been so relatively calm given all of the uncertainty out there and the prospect of an escalation of some kind when it comes to the trade war? Because
you've seen Trump bark and then retreat already many times. With Mexico and Canada, they made concessions that grabbed some headlines, but they were immaterial. They basically said, we commit to do things we've already promised, and that was enough, and then the tariffs were delayed. So you've not seen any real bite yet, and the market is sort of calling Trump's bluff at this point, hoping for the best, but with Trump, there is real risk that rhetoric does turn to policy.
Are there ways to hedge if that scenario doesn't actually materialize and we actually do see Trump bite?
It's very difficult because stagflation kills equities and bonds. The growth kills the equities, the inflation kills the bonds. I love tips versus conventional treasuries. I lock in a real yield of 2% above whatever inflation is, so I don't think a conventional treasury is a great safe haven in a stagflation environment, but a tip is. I think defense spending, you have unfortunately secular growth in that area as basically Europe either decides we're defending ourselves or meeting NATO targets, and that's one play where you are getting growth and not crazy multiples. And the big cap tech will become at risk, I think, in this kind of environment where Europe will put a lot of penalties on big cap tech if there are trade wars with the United States. That's an easy target for Europe. It's something that's populist that the population would support. So it will be a change of playbook for many investors that have really just latched on to this Mag 7. And the risk is that becomes the malignant 7 if things do go in the negative scenario.